Hello guys, glad to have you on board again today. Very quick update because I'm really running late on the schedule today. But anyway, despite that, let's go one step forward. The thing is that last week we've managed to break the resistance, the one we were paying a lot of attention to. And if you remember what I said correctly, that was basically the assumption that if we can settle some value out there, meaning not just making an upper shadow candles or just failed closes and stuff like that, I would consider putting my previous trades at break even. That's exactly what I think it is. I mean, we had some candle closes. I don't see too much bearish signals out there, signaling to me that even though the market has reversed prices, it doesn't seem to be as bearish to me. So until further notice, I have moved my stop at break even, which means I have available risk to invest in the market, and I'm really questioning whether or not I will do it. In terms of technical signal, I do have some favorable condition. As you can see, I do have trend signals close to the trend channel in an oversold condition. Remember, look at the momentum. We're making new lows when there's actually higher lows. So this would be consistent to me as a bears are getting exhausted. I'm going to jump on board to wrong foot them and keep pushing to the flow. If that were to be the case, then of course we're going to have to go higher and trade above the resistance context, which is the target. Remember, the flow trading is on the lower time frame in here. It's in between the trend channel. So as long as the trend channel isn't reversed, and even if it were, if it was to be reversed, then in that perspective, it has to transform by building a third range boundary and then confirming it. That means we're not yet there, in my humble opinion. And even if we were to reverse the actual trend channel, though the context, it still has to be transformed by a third range boundary. It means if we were to fuck it all up and go straight line afterwards, that wouldn't be a big deal. So in terms of S&P 500, yeah, uncertainty to me. I'm questioning whether or not I will put an additional trade into this game. I will wait to have this signal closed, and that's if it closes like that, with that type of signal, I would probably consider buying this trend channel, which means, well, trying to buy in this area with a stop probably set at the previous level as well. So as my previous trade is at break even, I'll probably eventually consider adding a position with a stop loss in here. Like I stated previously, we're still under the influence of a volatility area, so I am of course reducing position sizing. That's also accounting the risks that I've been explaining in the weekly updates, saying gosh, it's pretty damn complicated to navigate this 4200 area in the S&P 500. Macro isn't stable either, lots of confusion out there. So instead of being aggressive, if I add another position, it's probably going to be a very tiny one, like 0.5% risk taken on capital, or 1% at best. It mostly will depend on the quality of the signal. If I do get something like that to be closed in an hour or so, I think I'll definitely be going for 1% risk taken, but certainly not going to go anywhere above that. All right? So that's the way it is. On the other hand, I wanted to share something that is basically, what the heck is that? Okay, I've got some alerts. Yeah, seems like I'm probably going to jump on board. But there are some things that I still don't like. One of them being, I rarely get to talk about the German DAX index, but on a day-to-day basis in here, on the German cash index, though you can see the gaps, there's one particularly rare structure that has happened, and I just wanted to mention it. It's nothing related to the usual flow trading that we do talk about in the S&P, but just want to mention that to bring to the table an information that I do use in order to assess my risk limitations. Because this, when you gap up like that into a resistance, which is the previous all-time high for the German DAX has made an all-time high last week, by the way, though we up-gapped our way into this and then down-gapped today, which I don't like, because if this gap area remains unfilled, that's what we called an Iceland reversal, which means I'm currently more bearish in the German DAX with stop losses out there. So the reason why I tell you this is because I'm currently selling the DAX because of this structure, but I'm questioning whether or not I'm going to buy the S&P 500, even though these two asset classes are supposedly having high correlated factors. So I'm really explaining this to you to let you know that even I don't really know what to do. I have both bullish and bearish positions on assets that are supposedly highly correlated. So that explains, I think that's the best explanation I can give to tell you just how confused the market is and how confused I am as well facing this market. And that instead of taking harsh decision and saying, yeah, I'll do this and this and that and thinking and letting you believe that I know what the heck is going on, then I'd like to be humble for a second and just letting you know, God damn it, I don't know shit. And I really, really have no clue on what we're headed. That's also the reason why I'm firing shots at multiple directions. Just to make sure that I can, the position I'm in is trying to put my stop losses at break even whenever they are supposedly safe enough to do so, so that, well, as I fire shot to the upside and to the downside, it ends up, I don't know where we're headed. I don't think we're actually going anywhere. I just think we're probably going to stay into the nearby area for the extended periods of time. But the thing is that until then, if there were to be a directional move, either up or down, I will probably profiting from this and get stopped out of the wrong directional trades. So that's the position I'm in. I will, of course, use tiny position sizing as much as possible because I definitely am not confident. But I see some conflicting signals all over the place. So that's really the way it is. Though in terms of stock indices, if I got to give you a hint, my hint would be you do whatever it is that you want with that. But it's all confused. Very confused. I think the actual end game is due to the weightings inside the indices, meaning that if you were to look at the 40 stocks in the German DAX, you would see that some of them are absolutely reaching final excess, which means they're building their probable market top and will never, or have very limited upside potential out of this onward. And there are, on the other hand, some other stocks in the German DAX that have quite a lot of bullish potential ahead of them. So nets, I wouldn't be bearish on the DAX, but I think in the short run, there are more taking profits than actual new entries to support the lower weighted stuff. That means the higher weighted components of the index are actually topping up, where on the other hand, the lower weighted indices have much more room to grow. But it's hard to balance how much this will translate into moving the DAX index itself. Same story for the S&P 500. I think there's a huge weighting problem in the fact that just 5 stocks are weighting more than a third of the overall indices, and that in that perspective, if those 5 stocks were to take drawdowns, which most of them might very well do, then there should be a problem, because the question is, does the S&P 495 have enough strength to compensate for the drawdowns caused by the top 5 ones? So that's really the question I have, leading me to believe that I shouldn't say that, all right? But I'll say to you so that the lesson in here that you take out of this is really, to be honest, these are complicated navigated waters. Though in that current context, instead of just trying to play the professionals and stuff like that, just understand that professionals have a hard time navigating this area. This is complex, like stock picking, managing, balancing risks and stuff like that. So I would say if you're trading on stock indices now, the only lesson to take out of this is it's complicated. It is. And I don't want you guys who are still learning trading, for most of you, to dive into the subjective territory of how complex these things can turn out to be. Okay? So take it easy, guys, and just say, I try to explain how complicated it is, even for me. Though in that front, you'd rather like to don't try to overcomplicate your trading. Just try to make it easy, lower the position sizing and trade what you see, okay? You see a flow sequence, follow it. Just like I do. I do still see things and I trade them. Even though they might sound confronting each other and conflicting each other, I still do it. The thing is that I also reduce the position sizing, and that's the lesson to take out of this, all right? So don't try to make sense out of everything. Just try to trade what you see and lower the position sizing, accounting for the underlying risks and uncertainty of the current areas. All right. On another hand, when it comes to cryptos, I think crypto is much easier to read, even though we're in an area in which noise could show up. So remember, the context we're in is that in the Bitcoin mania, we've reversed the context in here, signed that we could be terminating the second flow trade. First and second would be terminated eventually. But in order to terminate a flow, remember, if you take out the overall structure in here, to terminate the second flow, you need to have a third range boundary plotted on the chart, and then the market should reject down to the Bollinger Band. All right, so that means we need to build a third range boundary, and then we need to go to the Bollinger Band to consider that the second flow is really terminated, and then that we will go into buyout for the third. Okay, so as you can see, the Bollinger Band right now is currently trading pretty much as where the previous bottom is. And remember, on a flow trade, there's always going to have higher lows and higher highs. So I don't think this is consistent enough. So I think we're going to go for the third range boundary anyway. And then we're going to have to assess two options. Okay, remember that if we fuck up this third range boundary and build a higher low point, a higher high point and stuff like that, it means the third range boundary has been squeezed and we start all over again, which means we're just going to have to do this, wait for the market to break the trend channel, the context, and then build the third range boundary, and then only after go for the volatility boundary. Okay, so that would be many ways to do the same thing. So once again, on these kinds of weird contexts, all right, just try to go easy on you guys. What have I done personally? I have bought in here because I missed the bottom in there, and I just decided to jump in the ongoing flow. Though the thing is, of course, if we go right up to the third range boundary, I'm going to have a question to ask myself. What do I do? Do I take the risks of going further and making more gains? Do I take some profits? Or do I do nothing or whatever? My personal assessment in that game will be assessing all the information that I gave and shared with you earlier. My end game would be to go safe as soon as I can, which means if prices go there, depending on the signal, the bare minimum to me would be paying for my stop loss, which means I will have to move my stop loss below the low point in here. And that means I'm probably going to have to take 30% out in the 30K area or so to pay for this stop loss. So that if the market rejects the third range boundary, I'm going to be stopped without taking any capital losses. All right. But still not closing the whole position, because I still think there is reasonable probability to go higher. How much of this probability of rejecting, and therefore I don't want to take a loss, or probability of going higher, I will decide depending on the signal there's there. If the signal is bearish, well, like I said, bare minimum will be 33%, probably more just to make a little gain, at least on the out game. If there are no signals at all, bare minimum will be 33%. And I'm probably going to let the whole position open for the rest to eventually make more profits to the upside, okay? So that's going to be the end game. In here, same thing. I don't have a clear answer. It's really, really clouded skies in here. So instead of making harsh, radical decisions like I'm taking it off the table or whatever, I put stop losses. No, I'm just going to say, all right, I'm going to leave some room for the market to decide. I'm not going to make an aggressive decision until the market has made significant enough reaction, which means right here, do I think about putting my stop losses there? I mean, fuck no. It's really not that way. I will put my stop loss whenever we get there, all right? So first of all, to me, I think we need a third range boundary in the Bitcoin. So I goddamn don't know how long it's going to take. All I can tell is that we've reversed the context in here, but we haven't reversed the trend channel, the channel itself. Though remember, if I built this channel, all right, sorry, I'm gonna have to do real quick. Sorry. So the thing is that, all right, if I had to build a channel myself, meaning for those who don't have the indicators, those who have and who say, well, I don't see the channel broken, well, build it, okay? Take the previous two tops and you build it up to the latest intermediate bottom. Though in that perspective, if you project this, you have the trend channel that says, well, we're still in the actual channel. So the third range boundary in here better has to actually reject and to get us out of this channel in order to consider that the flow has terminated. Because otherwise, to me, well, we could just stay there, right away, violently and brutally out of this area until, of course, we just fuck up the third range boundary. So I really don't have a goddamn clue of what's going to happen there. All I know is that this is not an area to be bearish. It's not an area to be bullish. It's an area to just let the market decide, all right? That's exactly the same that's actually going on with stocks. I think some stocks are pointing to more downside or taking profits. Some of the stocks seems like, well, they are underweighted in indices. They do have some bottom in place, and they do have quite some significant retracements to perform. So it's hard to figure out, just like I think it's hard to figure out a direction for the whole stock market, because I think there are not one stock market, there are multiple conditions. I think that's the same for cryptos. I try to make a hell of a lot of recent educational content to explain you that to me there's not one crypto market that has to go up, but there are a significant portion of the crypto market that will head to zero because it has no intrinsic value nor durable use cases or market shares to compete with. The thing is actually, well, I think some cryptos have a hell of a lot of potential, a lot more doesn't. So a lot more don't. So in that perspective, try to go easy on there as well, all right? It's really blurred lines all across the board. So try not to make too radical decisions. If there's really something to take away from all the subjective stuff that I've been putting into today's podcast is look at the technicals. Look at the things that you can handle. The rules that you have. If you see an opportunity for a trade, go ahead with it. If you don't see enough risk limitation to go with it, well, just don't, okay? And understand that the moment we are in terms of trading isn't a moment in which there is a lot of confidence and stuff like that. There is a lot of uncertainty in the current times, and there's no way you can come along with that but accepting it, okay? Lots of professional people I've been talking with. I talk with a lot of money managers as well, though I'm not the only one in this situation. Though I can definitely tell you the situation is complicated for hell a lot of professionals. So you will feel that uncertainty bias even more as you guys are learning trading, and you will fall for the traps and stuff like that. So I do know you feel that uncertainty even more than I do. The lesson I would give you out there is, well, when I do my broader analysis, I see a few people out there playing the usual gang stuff or guru stuff because they know you're weak, okay? You're feeling this uncertainty, and so many times you're trying to just fill the gaps, to say, well, I feel so much of this uncertainty bias, and the easiest way for you to come along with this is to trust someone who feels confident enough with the market. And I see a lot of these guys right now. They're very dangerous, to say the least, because they use your weaknesses. They use your fears. Your fear of uncertainty is something that you can't feel. You just have to accept it and work around with it, all right? There's no way to compensate. By following whichever guy on YouTube feels like he does know. He feels very confident when he speaks. He feels like the goddamn thing that's going on, he knows how it's going for whatever reason. Let me tell you one thing real clearly, okay? All the professionals that I know of, that I can prove they are making actual money over long periods of times in the market, we all have the same feeling now. So god damn it, all of these fuckholes in here out there just saying and pretending they know, they don't know. They just play on fears for whatever reason they are. Most of the time, this is just the proof of their inexperience in the market. So make sure you stay as far as possible from these guys, okay? If you think of one guy that could be, that you could follow now, which is actually doing and playing this game now, well, really unfollow these guys. This is really, really the best advice I could have now, okay? These uncertain times is where you would easily be able to make the real difference in between who's going to be durably trading and still be there years from now, and who is just yet another YouTuber who is just going to play on your fear of uncertainty by letting you believe that it does know. It doesn't. No, it doesn't know. And if it tells you it does, well, that means he's lying. Because professionals are all agreeing to the fact that there are definitely blurred lines all across the board. It's not an appropriate time to feel confident about the market. All right? So that being said, I wish you guys a pleasant day. See you guys next week.